Mr. Chabalala, unmute your mic. Your mic is muted, Mr. Chabalala.
All right, okay. I'm sorry for that, Lenas. I'm sorry for that. Good afternoon, everyone. I'm Mr. Chabalala. I'll be sharing with you the information about posting to the general ledger. What is important about general ledger that we must know as learners is that we are dealing with individuals' account. We are recording individuals' account in the general ledger from the CRJ, CPJ, DJ, and CJ. But in this case, our focus it is on the cash payment journal. It is on the cash payment journal. What is important about the cash payment journal is that it is the book whereby we record all the payments of the business. It is where we record all the payments of the business. Those payments, they should be reflected in the cash payment journal. Then we'll be doing the posting to see how much the business have used for each and every account that they are having. Now let us look at the general ledger. Here's the general ledger. We look at the different accounts now. Remember, from journals, we have accounts that were affected by those transactions. Then we have accounts that falls under owner's equity. Those accounts that falls under owner's equity, they increases on the credit side. Then the credit side, remember, learners, it is a right-hand side of our T accounts. It is whereby owner's equity increases. Then they decreases on the debit side. They decreases on the debit side. Now, on the debit side, it is whereby our accounts will decrease as owner's equity. Now, talking about owner's equity, you are having the accounts that directly affect owner's equity. The first one, it is the capital. Then the capital increases owner's equity on the credit side. Then we have the drawings, which decreases owner's equity on the debit side. Then they goes with the expenses and the incomes. We look at the incomes and the expenses. Sales will always increases the owner's equity. Then the cost of sales will be debited on the owner's equity because it decreases or it is deducted from sales. Then looking at owner's equity again, we have the expenses and the incomes. All the expenses, they have a negative impact on the owner's equity, but the incomes, they have a positive impact on the owner's equity. It means all the incomes, they will increase owner's equity, while the expenses decreases the very same owner's equity. Now looking at the assets, we are saying all assets increases on the debit side, and then they decrease on the credit side. Remember, learners, this is just the basic information that you need in grade 8, 9, 10, 11, and 12. As long as you continue doing accounting at FET level. Now here under EMS Financial Literacy, this is the basic knowledge that you must have in your mind. Now let us look at the general ledger, the columns of general ledger. Again, it is important to understand these, learners. The debit side and the credit side, they have equal columns. They have equal columns for date, which is date, year, and the month and the day. Then details, the contra account, whereby we write the contra account. Then you have the folio reference, where we write the subsidiary books, where the account comes from, or we can write the balance brought down or balance carried down. Then the amount, it is whereby we record the total amount of money that was paid by the business to pay for such account. Now, everything that is happening on the debit side, it is the same thing again that is happening on the credit side. Now, let us look at the double entry principle. This double entry system, we are using it when we do the ledger accounts. Now, let us give you the example here. When we pay the weekly wages, there are two accounts that will be affected, which is the bank and the wages. The bank, it will be credited and the wages will be debited. Then again, we have this one whereby the business purchased a vehicle for 75,000. Remember, we have two accounts here. Bank, automatically it is affected. Then the new account here, the contra account, it will be the vehicle. Then we look at the impact of those two accounts under assets, owners, equity, liabilities. When you look at the bank, it is an asset. Then the vehicle, it is also an asset. Then two of accounts, they will affect asset directly. Now, bank will decrease when you buy the trading stock. It means when you buy the trading stock, bank will decrease and increase when trading stock account will increase. Now, looking at the posting, exactly using the columns that we're having under general ledger. We're having the transaction of trading stock, as I was saying on the previous slide. If we're having the transaction of trading stock, here's the trading stock. Trading stock account will decreases bank account as an asset. This one, it is an individual account, one account. Bank will decrease because of the trading stock. And again, on the trading stock account will increase because of bank, because we have purchased the trading stock. Then we have the transaction of wages. What will happen with our wages? When we pay wages, bank will decrease on the credit side, wages will increase on the debit side. Remember, wages, it is an expense. Once we pay the expenses, it means they accumulate on the debit side. But now our posting, it is not about this. This is just a basic information. Now let us look at the posting to the general ledger now, from CPJ to general ledger. Here are the transactions that were recorded in the general ledger. You can see the transactions. All the transactions are here now. Bank, it is the total amount of 3,500. Then we have wages, 1,800. We have consumable stores, 300. We have the sundry account, which consists of drawings, creditors, and stationery. Then the total amount, it is 1,400. Now, the very same information, it is the information that we need to see it in the general ledger, whereby we'll be recording each and every account independently so. Now, let us look at the general ledger. On the general ledger, we'll be having the drawings account. Remember the amount of drawings account, it was 700. Then the drawings, it falls under owner's equity. It will be debited because we said it has a negative impact on the owner's equity. It means it will decrease the financial interest of the owner in the business. Then we have the bank. The total amount that was paid, it will be recorded on the credit side. We'll say it is the total payment, CPJ, 3,500. Then we have the trading stock account. On the trading stock account, we'll be having total amount that was paid for trading stock. It is 1,800. Remember, learners, this drawings of 700 and the trading stock of 1,800. The total amount was added in this 3,500 of total payments. This 700 and this 1,800, they are already included in this 3,500. But now we apply the double entry principle by saying the total amount of drawings, it is 700, it is debited here, but under the bank account, it is credited. It is included in this 3,500. The same with the trading stock. This amount of the trading stock, 1,800, it is included in this total payments of 3,500. Now on the creditors, we have paid the creditors 500. When we pay the creditors, the total amount of 500, it is included in this total payment. Then it will be debited on the creditors. Remember, creditors, it is a liability. They decrease on the debit side. They decreases on the debit side. Now under nominal account section, we'll be having the stationery. Then the stationery, it will be an expense of the business. It will be debited with 200 rand. Then we have wages. Wages, it is also an expense. It will be debited with 300 rand. Remember, this 200 and this 300, they are already included in that amount of total payments, which is 3,500. Then what is important to remember about this, learners, is that under nominal account section, we record only the expenses and the incomes. Only the expenses and the incomes. Then under balance sheet account section, we record capital, drawings, all the assets, and all the liabilities. Now here we are having drawings only, we don't have capital, but then we have bank and the trading stock, which falls under the assets. Then we have the creditors, which falls under the liabilities. It means they fall under balance sheet account section. Then you can see all other accounts are debited, except bank account, which is credited. Once you are having the transaction, that scenario that shows that bank has been credited and other accounts has been debited, it means you have applied the double entry principle. When you add these two accounts together, they will give you 3,000 bank account. When you add the drawings account, then you add the bank of trading stock, you add the bank of creditors, they will give you 3,000. Then coming to nominal account section, we'll be having this 500 of stationery, 200, and wages of 300. Then the total amount, it will be 3,500. This 3,500 included all other accounts. Then it means you have applied the double entry principle. It is important to understand the double entry principles, that all the expenses, they must be debited, all the incomes must be credited. Then the assets, it will depend whether we have purchased the assets or we have paid the money using the bank account, money in the bank account. But the most important thing, learners, that you need to remember, bank account include all the expenses that were paid by the business. All the amount that were paid by the business, they are included in the bank account. We are saying here, all the accounts have been debited except the bank account. Then the bank account, it is credited. It means we have followed the double entry principle. All other accounts have been debited in the bank account, and then by the bank account, then the bank account has been credited with all those accounts. Then it means you have applied the double entry principle. Now, in conclusion, learners, in order to master the general ledger, to master the accounting equation, you need to be able to classify the accounts. Once you classify the accounts, you'll be able now to tell this. You'll choose whether the account, it is an asset, owner's equity, or liabilities. Now, what is important about this, learners, is this the written information. Assets, they increases on the debit side, while owner's equity and the liabilities, they increases on the credit side. If you can master these, learners, it means your general ledger, it will be simple to approach it and to do it and to master it. Also with the accounting equation, because we need this information when you analyze the transactions in the accounting equation. All assets, they increase on the debit side and decrease on the credit side. Owner's equity increase on the debit side and decreases on the debit side. The liabilities, the same, they increase on the credit side, decrease on the debit side. Now we are saying, learners, know this information. Ask your teacher to do the copy for you, or you can write it on the blank page. You write this information, then you paste this information in your room every time when you deal with EMS, when you revise EMS, when you deal with recording of the transactions in the journals. Deal with this information. All the assets, when you purchase the assets, CPJ, owner's equity, it will affect the CPJ and the CRJ. Liabilities, in most cases, we are talking about the creditors journal. If you can master this information, learners, you'll master your general ledger and the accounting equation. Thank you. This is the end of today's lesson. Enjoy other lessons from next week, learners. Thank you very much.